Nah, word. I'm fake trying to break this down though. I'm trying to break down this little trade setup I took during the Asian session today. Before I start, bro, pay attention to the time I take this trade. So this is the 5 minute chart. Zoom out to the 15 here. We're coming into this 15-minute order block right here. So that's something to keep in mind. Drop down to the 1 minute. Alright, word. Drop down to the 1 minute. It's around 7 o'clock, so we're right in between the 650, 710 macro, and that's on purpose. I only trade usually after the macro, but since this is Asian session, I know volatility and volume is usually garbage, not there at all, so really trying to take advantage of that volume during the macro time. So let's let this play out real quick. So this is the structure I'm looking for right here. Before I explain this real quick, let me just draw it out. So it's gonna look something like this. We're gonna come up. We're gonna see a higher low, a higher high. Then right after that higher high, I want to see a sharp move breaking that initial higher low. So it's gonna look like something like this. Change in character would be right here. For example, this would be the change in character. So after that change of character, or change of state of delivery, whatever you want to call it, um, I want to see a pullback. Not exactly at the breaker block. I know you guys are already looking at this like, alright, it's a breaker block, but breaker block would be order block broken. Now it's a breaker block. I want to see this get mitigated, stop a few orders, maybe land inside a fair value gap, and then I want to enter around here. Then that's where I'm gonna look for my entries, probably this little area right here. But yeah, let's see exactly how this played out. I don't quite remember, but let's play out like two more bars right here. So yeah, this would have been the optimal entry right here. Well, not optimal, but the early, I would say early. This would be your early, very early entry right here. We came up, retested the breaker block right here. Technically, the breaker would be down here, but like I said, wait for mitigation. Preferably a previous order block for real. So once we're here, I'm like, all right, it's 7:08. It's time I should start looking for trades. So, well, I should start looking to enter. But I really wanted to wait for more confirmation on this. So, for me to wait for more confirmation, I'm like, all right, let me wait for a lower low. So that's exactly what ended up happening. All right, so at this point, we formed a bearish fair value gap as we had formed that lower low. So at this point, I'm like, okay, this is looking like an A plus. Well, not A plus, but it's looking like a pretty good setup that I would usually take. Um, not considering all the bullshit that's going on with Nasdaq right now and the fucking stock market, but Pose being down $2,000 on the day. But as you can see, I entered around right here. So I obviously mark out the fair value gap. I'm expecting this to hold. This is my entry point. I'm expecting this to hold. I put my stop at around 20 points. I'm aiming for sell side liquidity down here. So Usually Asia session doesn't give us that much volume, like I said before. So usually I wouldn't aim for 60 pips. Well, not pips, my bad, 60 points. But I'm that accustomed to trading currency. I'm still saying pips and shit. It's not even pips no more, but same shit. But we're take profit at sell side. Let's just see how this plays out. If I remember exactly what I was thinking going through this trade. So at this point, we're retesting that order block, which concerned me a little bit at the time because we only want to go all first tap. So whenever we're at a PD array, a premium discount array, um, order block, fair value gap, mitigation block, breaker block, it's usually one time use. So I want to see it only get tapped one time, and then we continue to create that lower low or higher high or whatever it is. If it gets tapped in twice, alright, it's gonna be lower probability, but I would still probably take that trade. If it gets tapped in more than 2 times, then yeah, that area is more than likely gonna get broken out. At this point, we're seeing follow through. This was an interesting point in the trade because at this point, I'm like, alright, we just gotta convert. We just gotta follow through. I'm like, yeah, this should be over in a few minutes. I'm thinking in my head, if we are able to respect this fair value gap. I knew this would be an important fair value gap, although I don't really like trading only 2 bar fair value gaps as opposed to 3 bar fair value gaps, like so. 3 consecutive red bearish candles forming an imbalance right in the middle, as opposed to an only 2 bar fair value gap, because these are, I would say, less probability. But yeah, I'm definitely looking for this to hold. If this doesn't hold, then that's when I start to reconsider my position as to what I'm gonna do, whether it's gonna be taking partials, cutting my stop loss down a little bit, or just exiting out the trade. It depends. At this point, I'm marking out more sell side liquidity levels that the market could potentially reach down to. Now we're just reaching about 50% encroachment of the fair value gap, still respecting that bearish order flow, which is what I want to see. So now at this point, we're creating relative equal lows. If this doesn't get swept and immediately jumps back up to the upside, if we get a bearish closure, like a bearish engulfing maybe, beneath this relative equal lows, then it's definitely going to be a sign that the bearish order flow is still intact. So that's basically what I'm waiting for. I basically know this is going to get broken out at this point. This point, we're seeing more taps on this fair value gap. So now at this point, this fair value gap is done. At this point in the trade, I'm pretty sure I took it off my chart, but just for reference purposes, I kept it. Just, y'all can see exactly what was my thought process as to like all the structures I had on the chart. This is exactly what I was thinking throughout the position. We also had got this liquidity sweep right here. I was paying attention to. We grabbed this high and then immediately closed beneath the gap. So I'm like, all right, hopefully this gap is is holding, even though it got tapped into 3 times. It's still for some reason not getting broken out of yet. But let's see what happens from here. I think we end up actually breaking above it, if I remember. So at this point, we're reversing a little bit, but it's important to be patient. You know, this is an Asian session. The fucking price action is gonna be ass. Like that's no surprise, but you know it's important to be patient with Asian session. You know, that's one thing I've learned trading NAS. At this point, I would have been in drawdown a little bit here. At this point, I'm definitely considering if I want to take a partial exit. We come down, form some more lows right here. Then I think one more candle up. Yeah, right here. I'm like, all right. We form another gap right here. I'm telling myself if this gap holds, all right, I'm gonna have to either cut my stop loss, cut the trade in half. So right here, I see that this ended up respecting, so I ended up just cutting the trade in half. So you might be asking like, why would you do that? Like, what does that even mean? Like, you already held it. Why would you even, cut the trade in half at this point, right? So my thought process behind it is, I'm basically just kind of like cutting risk. I'm just managing the trade, saving risk. Yeah, just managing risk. Essentially, that's just managing risk. We're risk managers, man. That's really all it is. We're risk managers. So I cut the trade in half. So all that means is I'm cutting the position size in half. Instead of one contract, well not contract, but it's not futures. It would be just one lot. Um, I'm now down to zero point 0.5 lots at this point. So I was risking 200. Now I'm just risking 100. Just lowering the risk. And by that, instead of like, let's say I'm lowering, like, let's say if I were to, opposed to just cutting the trade in half, let's say I cut the stop loss down. I guess it would be, it just depends on preference. Cause at that point, I'm giving the trade room to run while also, managing risk. So yeah, I'm also losing my profits in half, but it's also giving me the ability to stay in the trade as opposed to, cutting the trade off completely and then re-entering, which is a whole nother thing. It's really debatable, to be honest, whether or not you want to take parcels or not. But yeah, at this point, the trade is cut in half. I'm still in the trade. At this point, I'm just let it run. Um, so yeah, we come up. I'm not gonna. I'll be honest. I'll be honest. It was a mistake on me, only because I failed to realize that you really just have to read order flow. And the way I'm showing you right now, the way I'm reading the charts is how I personally read order flow. The way that we're closing beneath the previous high, like this, like we're taking the high and closing below, to me is still signifying bearish order flow. Because we're technically not breaking any structure just yet. So that was my mistake, uh, that I failed to realize that. Because at this point, we come back one more time to consequent encroachment. We end up taking one more high. Let's just see how the 5 minutes is looking at this point. Yeah, so see how we never took the high? We came up, but we never really took the previous high. So this to me is still signifying bearish order flow. If I would have just held the trade, obviously, I would have made double the amount of I made basically. But it is what it is. It's just playing the game. You gotta just play the game, play your rules. There's always gonna be another opportunity to take the same exact trade, literally every day. But let's just let this play. At this point, I already know liquidity got grabbed, so I know we're probably heading down to these lows right here. Then we actually end up dumping after retracement, I wonder. I think it's at this fair value gap. Could be this one, but pretty sure it was this one. Oh wait, hold on. Am I still on the go to the 5 minute? Where was the gap? It could have been this gap right here. Yeah. Came up halfway, about 50% encroachment of the gap. Then we ended up dumping, and this was around. Again, pay attention to the time. 8:50. 8:50 macro. 8:50 to 9:10 macro for London session. Asian session closed to London session open. London session pre-open. So yeah, that was the trade. That was exactly what was going on in my mind during the trade. Ended up hitting sell side liquidity exactly, and that's basically the bearish breaker model. Now, damn, one thing I did forget to mention. One thing I did forget to mention is talking about market manipulation. If you want to see a prime example of market manipulation, study this trade, and let me explain to you why. Let me explain to you why real quick. Right around Asian session, we saw, look, let me look. So right after I mentioned how all we had to do was convert the trade, all we had to do was just lock it in. We did not have enough liquidity to make that jump all the way down to sell side. Why is that? Yeah, there was just my phone smacked. Yeah, there was just not enough liquidity. But in order to gain that liquidity is what I'm trying to say. The market has to manipulate and take some sort of buy side liquidity in order to the market has to go higher in order to go lower. And I know that sounds counterintuitive, but you got to take a step back. It's like, think about it like this: you got to take a step back in order to take 2 steps forward. It's almost like a rubber band in a way. But I seen that analogy somewhere, but I fucked with that analogy. But the way I like to think about it is taking 1 step back to take 2 steps forward, and this is the way it does. This is the way it does it. So let me just take out any fucking shape right here. Right here, what do you see right here? This to you is just probably just a choppy environment, and it is. It is a very choppy environment. And you're probably thinking like, damn, why the fuck would anyone trade this shit? Shit, I wouldn't. But with the right conviction and the right with the right conviction and the right bias, you're gonna realize that this is accumulation. This is the first step in the power of three. So if you study the power of three, which is accumulation, manipulation, and then distribution or expansion, right? So in this instance, we're distributing, but this is the accumulation. Then what you're gonna start to see is that we ran out of liquidity here. We accumulated. Right after we accumulate, we manipulate right here. Manipulation. Manipulation. Then after a while, remember what I was saying, we was just taking out the highs, never really breaking structure at all, but just taking out the highs, breaking below, or closing below, I mean. Then we see the distribution right here. Obviously. Clear as day. Or so this would be prime example of the power of three, AMD. which kind of just looks like this. Manipulation, distribution. Oh, this is the model. So when you're combining models within models, keeps on adding that conviction onto the trade, that's when you get a real winning trade for a gangster.